Okay. Yeah. Good afternoon, everybody. So today is going to be, we are going to be as brief as brevity can briefly be. But the thing is, we are bringing in IBM, and then they've just been here because much more like what we already have in the notes. If you see the module page, which I'm going to share now, and Dr. Ebere will be giving some talk. Then I will also come in, and then we will have, let me share. I just hope it's fine. If you can't see it, just let me know. Can you see this screen?
We can see your Outlook.
Can we see the screen?
Yes, now we see the presentation, yes.
The presentation. Very good. All right. So we'll take you 1 hour, and then we'll bring IBM experts in, to look at other areas which we are trying on still on blockchain and trade finance and what they've been able to do. It was very, very nice we bring them in because we were thinking some things they develop is still in the market. So while discussing with them, we discover they just maintain, they don't actually have it again. So which is good. So instead of us teaching what doesn't exist, what was existing 5 years ago, 4 years ago, no longer exists, and why they pulled that from the market, what are they currently doing, what can blockchain do, what can their own software, what it can also do.
Yes.
All right.
We can go there.
Exactly.
Someone is talking at the same time. Oi, 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 oi. What is going on? Okay. I think I'm having something is happening here. Interesting.
That's fine. We can see your screen, Celestine, and the colleague has just muted herself, so I think you can go ahead.
Okay. No, I was wondering. All right. So Ebere will move on to explain. She's currently the Global Bank branch manager, Zenith Bank, PLC. Has been certified, University of Texas on AI and all that. Also credit risk officer. So she'll come in that area. I made a video also, using AI in video to see one of the questions that we're going to answer. So Ebere, over to you.
Right. Okay. So this is an overview of what we hope to achieve within an hour. That would be a wonderful one if we're able to do that. But let's see how it goes. Okay. So we've already seen this, and the introductions have already been done. So let's see, we can go ahead. The next slide, please. Okay. So we're actually looking at blockchain and AI application in international trade. And look at the component, because blocks, the way it said blocks and then chains, joining them together. And then there are hashes, which are like the keys connecting the blocks together. And then we have the transactions, which are actually what are being dealt on, whether it's international trade or in the finance industry or whichever place we are talking about transactions. Then there's a consensus mechanism, because the remarkable thing actually about blockchain technology is that there are several systems all linked together. So, that's the beauty and the strength of the blockchain. And every one of them, if one person needs to join in the blockchain, there must be a consensus. But the hashes actually in this whole link are what looks like the keys that actually join the blocks together. And if there is a change in any of the hashes, or a minute change even at that, without a consensus, it kind of disconnects that particular system from the whole setup because it's already corrupted. Because the beauty of blockchain is that there should actually be an immutability, so to say, without consensus. All right, let's move on, Celestine. The next slide, please. Okay, so in talking about blockchain-based trade finance application, we have blockchain and letters of credit. which I'm sure in your industry, in your organization or World Trade Organization, you already know much about letter of credit. I wouldn't spend so much time on that. We'll just do an overview so that we can have a background refresher as we keep building on the blocks. Then we have blockchain and invoice factoring. We have blockchain and forfeiting. And then we also have blockchain and trade credit insurance. We'll move on to the next slide. These are things we are going to be looking at this afternoon. The next slide, please. So like as we move to the next slide, let me also say a few things about this blockchain technology. Sometimes in the process of time, people have begun to interchange blockchain with Bitcoin. Some people actually think that blockchain is actually the same thing with Bitcoin, but they are entirely different things, so to say. Bitcoin basically works on blockchain technology, but because Bitcoin is actually one of the oldest and you can say one of the most secure blockchain technology that have stayed for so long and is still getting stronger and stronger by the day. That's why it looks like some people interchange blockchain with Bitcoin, but the Bitcoin basically works on the blockchain technology. And the Bitcoin
She just send me Bitcoin now.
You too. Thanks.
It worked?
Bitcoin
Okay.
seems to
It's
be
work
one
now,
of
yes.
sorry, someone is talking in the background. Maybe you can get the person muted. So that is actually okay. So then blockchain application in the world of finance, Deloitte, one of the big four finance companies, actually has done a marvelous, a whole lot. If you have the time after now, you can actually read up a lot of their resources and materials in blockchain space. Okay, so they've tried to develop a lot of write-ups, a lot of programs, so to say, in terms of when it has to do with trade finance and blockchain. And financial institutions actually are looking for where they can actually do what they've been doing on a daily basis, what they've done over the years in a better and smarter way. And of course, we know like the way we are going with AI and what we've been focusing on all these in our different contact points that we've done, AI simply looks for a way of doing things we've been doing, reducing the time we spend on it, and ensuring that they are secure. And that's one good thing about blockchain is a security aspect of it, in the sense that when you're doing what you've been doing and been able to set up the codes and the blocks are joined by the hashes, and when it passes from one system to the other, anybody that is not in that connection cannot easily get in. Person must be approved, and if the person is not approved, there's no way you can get in. It becomes very impossible to get in. So Deloitte have actually done very well when it has to do with trade finance and blockchain technology. We can move on to the next one. These are things we can actually sort out and look at after that. It's just an intro of people that have done well in this. Okay, so when it comes to the blockchain, first and foremost, before now, we had a manual contract creation, like in letters of credit, usually, like where I work in the bank, I've dealt a lot of customers transaction. Even right in the bank, we've moved on from where we used to do the letters of credit manually, you prepare it. Now we also do it in the system. And usually when we eventually get the letter of credit issued for our customers, is encrypted. And that's actually what this blockchain also tends to do. By the time it's set up between the companies that are dealing in blockchain. Okay, so these letters of credit before now used to be a manual process, but currently it has moved on. It's actually automated, but when blockchain comes in, it moves it to the next level that is completely encrypted, to the extent that nobody can actually manipulate things. Now I'm talking about, let me also say a few things about this issue of letter of credit. There was an incident that happened in my country, in Nigeria. A particular customer of a bank actually opened the letter of credit. Transactions were made, but somehow those goods were actually meant, it looked like the goods went forward and they were delivered, but it was never delivered and money was parted with. But when blockchain actually comes in, such things will not happen, because as soon as those transactions are set up, the manual contract, so to say, are set up, it becomes encrypted. And even before goods are moved from one point to the other, before transactions are consummated, the encryption involved in it will not allow any kind of fraud, because everybody is connected. And once there's an attempt on a particular system in the whole mini system, many computers joined together, that particular one that has an issue will be removed and the whole system is reset and it continues to work. Okay, so there was also invoice factoring, where exporters use invoice to achieve short-term financing from multiple banks, adding additional risks in the event of delivery of goods. Of course, invoice factoring does with when, if maybe I have an invoice, money I'm expecting from a particular customer, I could go and discount that invoice and actually get funds to do what I want to do ahead of time. But all these things were done manually. These are the pain points of what made people begin to think of how can we actually use blockchain in global finance? How can we use blockchain to ensure that global trade is actually secure? So we had delayed timelines, we had delayed payments, like the story I just told us about that particular customer. And that particular issue, lots of money were lost until today. The pains from that business have actually not been overdone with, because there are some outstanding credits in the bank, some banks that runs into millions of dollars. These are issues, these are the pains of today's processes that when blockchain technology is brought into global trade and into international trade, these things will be greatly mitigated and handled. Let's go to the next slide. Okay, so like I said, letter of credit is a bank issued document guaranteeing payments to a specific person under certain conditions, often between banks in different countries. In fact, usually between banks in different countries. In the bank where I work, most times there's always one amendment or the other, and sometimes it has been rigorous because you amend it. They say, oh no, amend so and so section here and there in the letter of credit, and we just keep going on and on and on before eventually the LC is issued, and then the goods are shipped, and then the document is sent manually. In fact, as of today, while I was at work, there was a particular incident which came up because there was a document released from an offshore transaction between a customer of ours and a supplier in the UK. Okay, because the document was not confirmed, that transaction has been hanging, and the customer is frustrated. He's like, he's going to move his business. So in that bit of frustration, the offshore bank said, no, we cannot continue with this transaction because the document, the shipping document, which was received physically, has not been confirmed. But when blockchain comes into this matter and everything is encrypted, we don't have to get the actual document from the offshore bank confirmed by the supplier before the good is eventually delivered. And the truth is that as these things are being delayed, the good that was shipped is incurring demurrage at the wharf, and the customer is actually exasperated. And that's actually where the issue of blockchain comes in and helps to sort out this thing. So a letter of credit is just the bank saying, hey, we are throwing our weight behind this customer. He would definitely pay you once you ship and once we can sign the shipping document. But whereby the bank is having cold feet because the shipping document has not been confirmed, like we have in this scenario I have in my bank as of today, it brings a whole lot of loss, it brings delays, it brings anger, and it makes the two parties are actually not happy with the whole setup. So talking about letter of credit, that can also be sorted out with AI-backed blockchain. Let's go ahead.
Ebere, hold on. Emanuela, has there been a way, with WTO in terms of directly being involved in terms of movement of cash after trade negotiation? Do we have that obtainable in WTO?
So the question of trade finance is one that is discussed in the context of a specific working group at the WTO. To my knowledge, blockchain has not been discussed per se in that working group, but otherwise we're not involved in these types of activities, if it's the question you have.
Yeah, because we are trying to look at it in terms of when you talk of secured, for us to say, oh, we're going, every agreement, where it lands to is that whatever you have agreed is being, the process is there, that you say, oh, we will deliver. The country say, oh, we will accept. So it will not be complete until financial documentation have been certified. Are you getting me?
And financial documentation, but I would say, I mean, all the documents that are involved in an international trade transaction, so trade finance is one part of it, but then you have all the logistics dimension as well, which is very important, and the customs one. So we've had some discussions also in the context of the MISMIC group around the difficulties of small businesses to access finance, in particular trade finance, but not necessarily directly in relation to blockchain.
Because sometimes we may have issues in terms of we did a deal, from Nigeria and then down to UK. It took a long time, for the money to be transferred because of the currency. So they have to get dollar and get that. And then assuming now, the other person has supplied. And in the cost of getting the dollar, and pounds are the equivalent, and then suddenly there is a break in transaction. And then the money that was being sent to release is no more there. So what happens to that kind of agreement? You understand? Because the letter of credit tells us it's a guarantee that this has to take place. So whatever the money that has been paid must get to the other party or other country.
Yeah. So there's the payment dimension that you mentioned. There's the documentation dimension, which can be very burdensome, especially for small companies, and this is where technology can help. And linked to it, there's the issue, and that was not mentioned, but of double financing, where there's been quite a lot of fraud in the context of trade finance transactions, where bills of lading were used twice to secure financing, and this is where blockchain can also be interesting in terms of this double financing. So you have different aspects to it when it comes to trade finance or international trade.
Lovely.
Yeah.
Okay.
But maybe if I think it could be useful, if I may, to maybe recap the key specificities of blockchain, so that people understand what it can do and why it can be interesting to avoid double financing or for traceability purposes, etc. I mean, you mentioned the difference between Bitcoin and blockchain, which, I mean, maybe just for colleagues, I think the best way to think about it is that the blockchain is really the technology underpinning cryptocurrencies with Bitcoin or others, or other applications, just like you have the internet and the email being an application of the internet. So that's the way to look at it. And I think what is important to keep in mind is that the technology itself has interesting applications beyond cryptocurrencies, be it for trade finance, for payment, but also for trade digitalization, to get rid of paper in international trade, because of its decentralized nature, distributed nature, the hashing, not only in terms of the hash pointer, but also of the encryption dimension, the peer-to-peer interaction. So all of these, I think, is important to flag.
Okay. Now, Gobin, somebody's hand is up. Can you unmute?
Hi. Good afternoon. Thanks. Just following up on Emmanuel's comments, and I'm recalling the speaker at the last session, when was asked about blockchain, didn't have, or at least didn't express a very good experience with it. So just if we can have the your views, because we've heard that view, and with Emmanuel's background, and so just to hear, where it actually has, or in the industry, how it's used. Thanks.
Okay, lovely. So you see, we're trying to bring it. Now, the good thing about this today is we're not just talking about blockchain. We're talking about AI in blockchain. So it's now increasing the speed. Emmanuel is trying to say very important to be used, but we are now saying, it's actually blockchain, but we can bring in more of what AI can do to make that blockchain system, which you people have, to be fast better. Is Manuela's hand up again?
Yes, I just wanted to react to what Artie was saying. So the question was asked indeed in the last session, and honestly, for what that person was talking about, there's absolutely no use of blockchain. I mean, I think one has to keep in mind that there are certain applications, certain areas where blockchain makes sense. There are other areas where, frankly, it doesn't make sense.
Yes.
And also, when it comes to trade finance, we've seen a lot of initiatives. Not all of them were successful and have been successful. And as a matter of fact, the ones around letter of credit have had really mixed successes. The ones that are more successful are in relation to supply chain finance and what is called deep tier financing, because blockchain allows for a traceability down different tiers of suppliers, and that has proven to work relatively well. So I think it's important to keep in mind the limitations of each technology, and clearly blockchain is not the panacea. And one thing that I want to say as well is that when we use the term blockchain, it's a very generic term, but it covers many different types of technologies and many different types of business models as well. So you have permission blockchain, permissionless blockchain, public, private, you have some mixed hybrid blockchains as well. They all have their specificities. Not all of them link transactions in blocks. Sometimes it's just the transaction that is validated in a linear or non-linear manner. So there are many different ways of using it for different purposes. And depending on what people want to use it for, one technology, distributed ledger technology versus another, may be more interesting. So I wanted to flag that. And then in relation to AI, that's also an interesting point, because there are more and more projects that link the two, because AI can provide deep insights into patterns, for example, and blockchain brings the immutability and traceability dimension. So, for example, when you talk about supply chain traceability, it can be interesting to use both technologies in tandem, because AI will provide you insights very quickly, and blockchain brings the immutability.
Thank you very much. I know today is Emanuela's day because this is her area. so that's why I'm allowing her to talk. So we can also flow together in it. Okay, Barry, move on quickly.
Yeah, but I just wanted to go through that on letter of credit, because that's actually the base of international trade. Because this like given the scenario of how blockchain can actually be used when it comes to the letter of credit. So the applicant and the beneficiary enter into a trade agreement on blockchain. Okay, like I told you, I have an issue in the office which we are yet to sort out, because goods are being printed, because shipping document has not been confirmed physically, but this would have helped out. So the applicant issues a purchase order to the beneficiary, acting as the LC contract. The applicant gathers the LC details through a system on the blockchain, requesting the issuing bank to issue an LC, all done on the blockchain from ab initio, providing all the necessary information in a digital form. Then the issuing bank processes the LC, sends to the advising bank. The advising bank advises the beneficiary of the LC in a digital form right away and via the blockchain. Then the beneficiary accepts or rejects the LC digitally through the blockchain. And I think when all these things are done through the blockchain, it kind of removes the bottlenecks and the issue of shipping document being confirmed. At the end of the day, it reduces the time lag in getting this information delivered. Okay, let's move to the next one. Okay, yeah, for invoice factoring, this involves businesses selling their account receivable. I talked about that before, because sometimes you might have a good you're going to be getting in like 60 days, and a payment for maybe job done, services done, or goods delivered, whatever it might be. But you have an invoice for payment, but the person needs cash, or the country needs money to do something as at that time too. So that's where invoice factoring comes in, whereby somebody actually takes up to give the money requested for that invoice at a discount. And this also can be put in a blockchain. So in a blockchain-based trade finance system, invoices are now tokenized as non-fungible tokens, making them easily transferable and storable. So it can actually move from one person to the other. So eventually, whoever finally gets the final payment, it might be very far away from the person that initiated the invoice from the first instance. So payments are executed through smart contracts, and companies can trade their tokenized invoices on a distributed ledger. All these are blockchain systems which records all transactions. This approach actually reduces reliance on traditional lenders and promotes a more decentralized trade finance system, enhancing the platform with a credit scoring algorithm and a robust KYC model could also support mass adoption and further counter the dominance of few entities in trade finance. We can move to the next one. Now, talking about the KYC model, let me also expatiate a bit on this, because that's also the beauty of blockchain technology, because it is secure, because it's also decentralized. It kind of helps, gives the parties in the trade organization the confidence they need, because currently in the world over, the issue of beneficial the beneficial owners of transactions have become very, very key, because of terrorist financing, because of a whole lot of issues globally. The issue of KYC, of course, means know your customer. I'm sure by the time blockchain is used to do the invoice factoring, people won't be very scared of, who am I discounting his invoice for? Is it someone I want to do business with? Those things are taken care of, because from the beginning of the setup, with the blockchain, the hashes and the keys set up there, it makes everything secure and the wrong person cannot get into the loop. Okay, then of course, supply chain management. I'm sure Emanuela will tell us much more about that, but many companies are actually leveraging blockchain technology to digitize their supply chain. Of course, when these are seamlessly done, people get to keep their customers in store, and you don't get to lose built up you've done over the years, because the supply chain is completely and very well managed. By so doing, tend to reduce errors and fraud, shorten transit and shipping times, enhance inventory management, increase transparency, introduce authentication. One thing about blockchain also I would like to say at this time is that some of them can be consummated in a jiffy, some of them in a few seconds, some of them could take a longer time. But the ones that are consummated in a few seconds are usually, usually takes time to get them authenticated. But the ones that take a longer time are usually much more reliable. So in blockchain in supply management, we have transaction settlement, we have audit transparency, we have tracking on social responsibility, we also have accurate costing information, okay, because of course the blockchain is secured. Then we have better shipping data, like I was trying to mention earlier. I think it was even Emanuela talked about people using one bill of lading to consummate two transactions. I've also seen such in the office. I mean, there have been a time I took like almost like some days to get to reconcile my customer shipping documents with different bill of ladings. It was really taxing and it weighed me down. Okay, then preventing compliance violations, because the one I talked about, the transaction in my country where somebody opened the letter of credit. I think it has to do, it was even an oil business where the goods were meant to be delivered, but they were diverted, and money is still lost here today. They've not recovered. So preventing compliance violation, provenance, reducing human error. There have been errors when I was processing LC for one of my customers. We actually had some errors and it costed us a lot, but then we got it sorted out, but we paid for it. Okay, automated purchasing plan, automation, enforcing tariffs and trade policies, food safety, and finally reducing counterfeit goods. All this becomes feasible and workable with blockchain when it comes into supply chain management. Yes, Celestine, let's move on. Okay, so how does a smart contract work? You identify an agreement, multiple parties are actually involved to identify cooperative opportunity and the desired outcome that they want to come out of it. Then conditions are set. Now, when AI is brought into this blockchain, these conditions, of course, are put into the codes, which are checked over and over before they eventually put into the system. So these smart contracts are executed automatically, and when certain conditions are met, when and only when they are met. Because when it comes to blockchain, if usually there's a generic key which everybody has, and there's a specific key to the person who is initiating at that time T. And if those two do not match, it does not continue. So then there's a code business logic where a computer program is written. That's after the condition are set, probably, definitely, of course, manually gather together. What do we want to do? How do we want it to happen? How do we want to do this contract? Then the code business logic is now set up. Then the encryption of the blockchain technology is now set up after the code is written, because it's actually the code that will be fed into the blockchain technology, and it gets encrypted so that nobody can actually break into it without a key. Okay, then there's the execution and processing. The code is executed and the outcomes are memorized. Of course, when it has to do with normal Excel copy, people do editing and all those. But when it comes to blockchain, you don't just edit, except if you have a key and you're involved in the blockchain loop. Then the network updates. All the nodes in the network updates their ledger. Once this process is done, automatically all the nodes are updated, and usually there are millions of connected systems in this in the blockchain technology. There are so many,
And in
all
also, yeah,
Mhm.
also in these notes, in terms of network update, this is what area where AI can also come in terms of, you know, kind of to make it automatic, autonomize the whole system. So it won't need to go like this every time. It has to bring in changes down to it also. So yes.
Okay, yeah. So how decentralized finance works, which is also so normal, the usual traditional financial system, sender to the sender's bank, then the payment company comes in, then the receiver bank, then finally to the receiver. But when it becomes decentralized financial system, which is this blockchain technology, you can see the sender here, the receiver at the other end, but so many systems. I mean, you can't just imagine in your head how many are interwoven and connected to eventually get things sorted out in decentralized finance, which is the strength of blockchain, which is also what makes it secure. Because even if one computer is compromised, it just removed from the network, it just dislodged, and the other ones continue. So listen, I think you can take over from here.
Okay, so we have a Marco Polo network, a leading provider of technology. What they do is they supply transactions and payment. So they innovate, develop cutting-edge digital solutions that help their customers to, check their commercial activities and future-proof that. So they are very well known also in terms of maritime case studies, network maritime proposition, trying to develop different kinds of digital thing. So we do not have IBM or listed here because we feel they are going to present in the next 30 minutes. Also, present what they have developed before. They have the IBM blockchain solution for the food supply chain, where they use the Walmart's challenges, approach, and result, collaborating with IBM and other partners to develop this blockchain based on food trust framework. So this is, then they were able to get results from 25 products from different areas. I'm trying to get case study that has to do more with AI, which we have projected in terms of better transaction, high quality data, very like we keep saying, once the data is okay, then we have decentralized intelligence, like you have just mentioned, lower market entry barriers, greater transparency, improved trust. So these are benefits of blockchain technology in the AI ecosystem. Now we're coming into AI and blockchain because we already know that some of you are already very good in this area. So we're trying to now like add what more can AI do in blockchain and where has it been used? Or where has it been projected to be used? Or where has it been used before and no longer being used now? These are all the things that you're going to be hearing in the next 1.5 hours from us and also from IBM, and the possible best area to bypass the ones that are no longer being in use. So there are many benefits, better transactions, again, high quality data, and then decentralized intelligence. These are areas we are looking at. And then, of course, improve trust. Areas we are looking at what AI can do in the blockchain that we already know very well. First, when we talk about transparency with blockchain, we talk about data sharing platform, then we talk about blockchain-based platform that enables secure and transparent sharing of transactions, which parties are involved. Then we look at the real-time monitoring. This is where AI comes in. AI-driven systems provide continuous tracking and monitoring of goods throughout the supply chain, ensuring real time visibility. So we hope we're going to showcase this in some of the videos that we have, and also by IBM, where we see real-time visibility of this. Then we talked about automated compliance. AI automates the enforcement of trade regulations, like when she was talking about the network style, where the node has to be checked every time to be sure that they are compliance. And I think I have a video on compliance also here, where AI automates the enforcement of trade regulations and standard. So once the standard is there, it puts up into the negotiation with the WTO and every others, and then it reduces the need for manual check. Like we have said, human errors can be a problem. So AI reduces the need for manual checks and ensuring adherence to compliance requirement. Remember, she mentioned in our job, because there was no manual check, there was a problem. So AI can do this to reduce create trust in the compliance. Now, risk management, AI algorithms can analyze trade data. We already know this again with big data, and also with data analytics, that we can analyze trade data to identify and mitigate risks such as fraud, supply chain disruption. Very important. So these are areas where AI is coming to better what we have in blockchain. Now, in terms of that, the benefit of this system is that we have increased trust, like I've mentioned in summary, enhanced transparency, data integrity, foster greater trust among trade participants. Then we reduce errors, automation and accurate data sharing minimize human errors in documentation and transaction. Then faster dispute resolution. This is very important, especially in WTO. Blockchain, immutable records, and AI-driven insights speed up the resolution by dispute by providing clear and verifiable evidence. Now, improve compliance. Automated compliance check ensure consistent adherence to regulation, reducing the risks of penalties and delay. Now, it's very important because we're actually looking for examples, different examples, because I know many people will be saying, oh, give us an example of this. So we find it was a little bit difficult finding a current example of where blockchain actually works more, and how we were trying to, for us as scholars, we try to like project what AI can do. But at the same time, I was looking for, is there any current company currently that is using these things to work, so that when we can work on it and bring in using the Hyperledger IBM has developed, which is an open source, and can we do something better for WTO in this automated document, in this whole AI operation in blockchain, especially when it has to do with trade. So, like Emanuela said, there may be other areas, AI is doing, but when it has to do with trade, what has been developed, like using AI, our projection and the examples there, using AI to automatically verify trade documents, so that bills of lading, the invoices, using machine learning, natural language process, just the way we use it for every other data. So it doesn't really mean a particular one. Like first, the lecture from Dr. Pradeep, what, and Dr. Ansha, in terms of data usage, and all that. So it's still the same thing. Ours is whatever name you call the data. We can still clean it. We can still make it work. We can still use our Python. We can still encode it. We can still produce what we have based on that. So nothing has changed from medical data or trade data. So, and the same thing happens to, we can also use predictive analytics for supply chain optimization, where AI algorithm can analyze historical data stored on the blockchain to predict future demand. You see that? So still, the data has been stored, has already been done with blockchain, which we know very well, but we can use AI algorithm to check the supply chain disruption, check the inventory levels, and predict, allow companies to optimize inventory management. That is exactly what we're saying. Reduce costs and short timely deliveries. So we can leverage on this transparency and immutability of blockchain data, where we have AI insights that are more accurate and trustworthy. That is good. Remember, it is what we put in that we get out. So we still have that as a blockchain entirely. But then what do we do with the AI? We look at dynamic credit scoring, where we provide dynamic credit scoring for trade finance. So what do? We analyze borrowers' financial history. We can use AI to do that. Analyze financial history, analyze whether have they paid their bill, where did they default, and other things that, the pattern that blockchain has already provided on the blockchain. So we will know whether, are these people, are they trustworthy? Are they trustworthy? Are they used to keeping to their terms of agreement? So these are real-time credit assessment, that some people use even when you want to borrow a bank, borrow money, and then your credit check is being run. Try to know everything, adjust your credit terms, check whether you are in debt or something, and then so we can use the blockchain as course to ensure this data in this credit scoring process, which is secure, veritable, and temper proof. Now, we also know we can also bring in supply chain traceability and provenance. So AI can enhance supply chain traceability by analyzing data recorded on the blockchain, checking where is it coming from, what is the movement, how is it being transferred, the handling of goods, and how is it valuable, especially pharmaceuticals, where provenance is very critical. Then how can AI identify the pattern? Because we keep saying that when you understand the pattern, then AI, we can now make prediction, ensuring that products meet regulatory and quality standard. Then you come into areas like smart contract enforcement, dispute resolution. These are the things you'll be hearing from the lecture 9, from Dr. Ike and Dr. Vishnu. How do you enforce dispute resolution? How does WTO come into mitigate into this thing using AI? And also using the AI and law terminologies for this. How do we monitor the execution of smart contracts on the blockchain and automatically enforce these terms when conditions are met? Now, in case of disputes, AI can analyze contract data, transaction history, relevant communication to suggest resolution. So this reduces the need for human intervention and accelerates the dispute resolution process, provided a more efficient and transparent system. Now we have the real-time compliance monitoring, which is also part of it. AI can flag potential compliance issues such as money laundering, your customer violation, like Ebere mentioned earlier. Know your customer violations. This proactive approach helps to companies to avoid legal risk and ensures that all trade finance activities adhere to the necessary regulations. Now, these practical examples is where we are going to bring in what do you call them? We're going to bring in the IBM soon.
Yeah.
But then, yeah. Do you have anything to say, Barry, before I bring in the video?
No, go ahead.
Okay. I want to bring in the video of, yes. I made a video. It's also in the looking at automated scenario. I'll bring in, for example, practical example, um, 9. Sorry, 6. Okay. Can anybody live the video? Can we all see the video and hear the video?
We now see it. There's no sound for the time being.
No, I just paused it. But you can see it.
Yes, we can see it. Yes.
Okay, yes.
But there is no sound, it looks like.
You said?
There is no sound.
Oh my. I can hear sound. So surprised.
We can't, sorry.
I think you have to share, not only share your screen, but share the audio.
Aha. Okay. Hmm. Can you hear it?
No.
No.
No, we can see the images, but there's still no sound.
Yeah. I'm trying to see.
Maybe while you try to fix that, Celestine, if I can jump in.
Yes, I've seen it. Okay, go on.
Yeah, I just wanted to say a few words on IBM, just for colleagues who are on the call, so that they know what they've done and how they position themselves. So IBM has been behind the development of one specific distributed ledger technology, which is Hyperledger, which is a permissioned blockchain. So it's been used in quite a few trade projects, because a permission blockchain is essentially only accessible to those who are involved in that particular project. So it's not open to anyone, like the Bitcoin network, for example. And they launched some high-level projects like TradeLens, for example, but that was discontinued a few years ago. They launched it with Maersk. It was mainly due to some IP issues and some issues related to competition. It got difficult for them to bring on board other shipping companies. But it would be interesting to get their stance on that, the official line on that. The Marco Polo network on trade finance for letters of credit was also a high-level project. But it would be interesting to get an update, because I understand they had no funds last year, and so was pretty much discontinued, like other projects like Contour that was more on supply chain finance.
Can you hear this video now?
No, we don't see it and we can't hear it. No. So they've been quite successful, more on the traceability front, where they have several projects that are working better than the ones I just mentioned. But one of the problems with the Hyperledger DLT is that it's actually quite expensive to validate transactions. So it's a technology that is more expensive than other DLTs, and it's less used in the financial world also than other technologies like Auth Recorder, because it doesn't allow the participants to keep some information confidential the way other technologies do. So just wanted to put a bit of context when you will hear the IBM guy.
Okay. Yeah. Let me know if you hear the sound.
Real-time compliance monitoring in a global bank.
Yes, it works.
A global bank facilitates numerous cross-border trade finance transactions every day.
I did this. You can't see this video anywhere. I did this and posted it online.
We can
so that
see
you
it and hear it
understand.
now.
The wordings are there, so you understand it more.
These transactions involve multiple parties, large sums of money, and varying regulatory requirements across different countries. To comply with international regulations such as anti-money laundering, the bank must continuously monitor its transactions for compliance. The complexity and volume of these transactions make manual monitoring impractical and prone to errors. The bank records all trade finance transactions on a blockchain platform. This includes detailed information about the parties involved, the nature of the transactions, the amounts transferred. The blockchain ensures that all data is secure, transparent, and tamper-proof, providing a reliable source of information for compliance monitoring. Real-time AI monitoring and analysis. Deployed to continuously monitor the transactions recorded on the blockchain. The AI system is trained to recognize patterns and anomalies that could indicate potential compliance issues, such as unusual transaction amounts. rapid movement of funds between multiple accounts or transactions with high-risk jurisdictions. For Know Your Customer compliance, the AI cross-references transaction data with customer profiles to ensure that all participants have been properly vetted. The AI checks for inconsistencies in identity verification, such as mismatched details or incomplete documentation. Anti-money laundering compliance checks are crucial in the banking sector. The AI system specifically focuses on detecting AML violations by analyzing transaction patterns for signs of money laundering. This includes monitoring for suspicious activities like structuring, which is breaking up large transactions into smaller ones to avoid detection, rapid transfers across borders, or transactions that do not match the customer's typical behavior. The AI also compares transaction data against global sanctions lists, politically exposed persons databases, and other watch lists to ensure that the bank is not inadvertently facilitating illegal activities. 4. Real-time alerts and action. If the AI detects a potential compliance issue, such as a transaction that appears to be part of a money laundering scheme or a participant with incomplete KYC information, it immediately flags the transaction. The AI generates real-time alerts and provides detailed reports on the nature of the suspected violation. These alerts are sent to the bank's compliance team, which can then take immediate action, such as pausing the transaction, conducting a further investigation, or reporting the activity to regulatory authorities. 5. Automated reporting and documentation. The AI system automatically generates compliance reports that document all flagged transactions. The reasons for the alerts and the actions taken by the bank. These reports are stored on the blockchain, ensuring that they are transparent, immutable, and easily accessible for audits. The AI also ensures that the bank meets its reporting obligations by automatically filing necessary reports with regulators, such as suspicious activity reports or SARs, in the case of potential money laundering. 6. Continuous learning and improvement. The AI system continuously learns from new data and feedback from compliance officers. As it encounters new types of compliance risks or detects emerging patterns of illicit activity, the AI updates its algorithms to improve its detection capabilities. This continuous learning process helps the AI stay ahead of evolving regulatory requirements and increasingly sophisticated financial crimes. By implementing AI for real-time compliance monitoring,
I put up this one also. Let's see the outcome of the idea of what AI can do. So I put it up when I was forming the video so that we can see what AI can do in the outcomes.
the global bank achieves several key benefits. Proactive risk management. The AI's ability to monitor transactions in real time allows the bank to identify and address compliance issues before they escalate, reducing the risk of legal penalties and reputational damage. Improved efficiency. The automation of compliance checks reduces the need for manual intervention, allowing the bank's compliance team to focus on more complex cases and strategic initiatives. Enhanced accuracy. The AI's advanced pattern recognition capabilities help detect subtle signs of non-compliance that might be missed by human analysts, improving the overall accuracy of the bank's compliance efforts. Regulatory assurance. The use of blockchain for secure and transparent data storage, combined with AI for real-time analysis, ensures that the bank can demonstrate robust compliance practices to regulators, auditors, and stakeholders. This AI-driven approach to real-time compliance monitoring is particularly valuable in the highly regulated and fast-paced environment of global trade finance, where the stakes for compliance are exceptionally high.
Okay, so I use InVideo to make the video, so that's why it's showing InVideo there. But the whole work was my creation. All right, so let's have a few minutes of question or a little contribution before I bring in Anthony. I think Anthony is here now. Yeah, do we have any question on this? Okay.
Dr. Bright has a question.
Yes, Dr. Bright, over.
Oh, sorry, I was not. Yes, I'm muted now. On mute now.
Okay.
This brings me back to a question I raised at the last lecture, where the issue of systemic bias was raised, but in connection with trade finance regarding small, medium, micro, small, and medium enterprises. That what you feed into the system in terms of your data, even within the blockchain, somehow gives you the continuity that actually this is correct. Part of the things we have witnessed or heard from a lot of these companies is that for whatever reason, with their starting point, they don't have a recourse to be able to say your information opinion. It's not 100% right. And therefore, the blockchain or whoever is managing it has built this, whatever the threshold into it, and it just goes on in what we describe as a random walk in econometrics. So I'm wondering whether, in terms of level of confidence, it's okay if you are dealing with a big company, big, maybe Mercedes or, big corporation. But if you are dealing with a small corporation, small company, they don't seem to have anything to resort to. There's no recourse. And I wonder how, in the work that we do here, how we can sort of really solve that problem. The last time your colleague talked about being able to provide evidence of the quality of their sample, of their work, and the products, and so on and so forth. This doesn't cure it. Because this is now a different thing where blockchain has identified or concluded that a particular entity, a small corporation, or so a small company, has a particular thing that they don't like.
Okay, sir. Now, Anthony is going to answer you, good enough is here. So it will answer you based on what IBM has done and what it can do, not just for blockchain, but for what AI can do, because we have patterns and we work with patterns. So we could know pattern of people who are actually doing good business, good things. So you can say, oh, they defaulted last year. There's a possibility that, that is what we call it predictive analysis. There will be a possibility of default if the status, if if there are no regulations. So we are also looking at the regulations. And what of if the person go off? The lawyers will come up to that later. What of if this goes bad? What happens? So
this is not about the loan. No. This is not just about the loan dimension. A bank can conclude that this little company has done something that it didn't like or that is wrong, not due to the quality.
That is bias.
Yeah,
so we
that's
can
what
bring
I was
in
asking,
bias. Yeah, exactly. Now, how do we bring in bias? That's why I say also, even in AI, when we teach it, there's what we call ethics. It's very important. When we follow that ethics very clearly. And under ethics, we are supposed to be open. We are supposed to deliver the way it is without fear, or we just do what we are supposed to do. So in a good system where trust is there, providing trust, then we believe what you have said and we put it up and then we get the result. But if one business or one transaction or one trade negotiation goes bad, then that means the country will be blacklisted. That's why I said it comes into what we say we will do, especially in the letter of contract. And we say we will do this, and then it's no more there. Or bigger companies want to submerge the smaller companies. So there are some laws, especially in EU. We know very well EU is bringing a whole lot of law to make sure smaller companies still exist and still move up. So these are all the things where it comes to, like we keep saying, good leadership brings good results, make the data to be trusted. So these are all the things that goes on. We can do, but remember, it's what we put in that comes out in AI. So Anthony, let me introduce Anthony because of time. We just have, he has 1 hour, and he will share the screen. Anthony works for IBM. I don't know if Anne is here, but he's here now to represent. We can't see you. And then
yeah, super. So I'll share my screen in a moment, and I'm happy to take questions as we go, or I'm happy to take at the end or follow-ups as best we can support the university. So I'm really happy to do that.
Yes.
And I joined partway through that conversation, but if at an appropriate point in the presentation you'd like to restart it, I'm happy to do that. All right. So my name's Anthony O'Dowd. I'm a distinguished engineer here at IBM. I work in one of our software development labs here in the UK. We develop a lot of software. And even though I don't work on it anymore, I was involved in IBM's blockchain initiative from pretty much day one. In fact, before day one. So I was one of the technical resources who was involved as IBM got going in blockchain and lived through the whole experience. And what I'd like to present to you today is our learnings in that area, what we did, what we're still doing, what we're not doing, and also invite a conversation, because I think in the context of what Celestine and the team have set up, we learn most when we actually have discussions around these things. And I'm in no sense defensive. I'm happy for any questions at any level. As I say, I worked on it at a high level, but I also helped an open source community that I'll explain later develop their software development SDKs for applications and smart contracts. So I can go to quite a low technical level in terms of blockchain mechanics and technology if we need to. All right. But what we've tried to do today is to put together a session that will hopefully be interesting, and we can follow up if we need to. And again, any questions that you have that are related, I'm happy to take them as we go, or happy to defer them to the end or whatever. And sometimes I'll say, great question, but I'm going to cover that in 2 charts time. All right. So without further ado, I won't be able to monitor the chat because there's the camera and there's the presentation and whatever. So if there are any questions, Celestine, anybody just raise your hand. I'll watch for their hands being raised. And I will try and look directly into the camera, but I'm going to move all you guys over now onto another screen. So you're over here for me. So I'm looking down the barrel. So I will try and pay attention over here at the odd time. But hopefully that's clear. Right. So let's do a quick share here. And right. So hopefully you can now, Celestine, can you see the screen? It's got
Yes.
Good. All right. Excellent. Okay. So let's move on. So as I say, this is a presentation that I've put together this afternoon. It's based on a lot of presentations that we've given in this space. And you might think when you see the first few charts that it's quite a high level, but actually we're going to get into some quite sophisticated concepts here. So as I say, my name's Anthony O'Dowd. I'm a distinguished engineer here at IBM. I've worked on a range of different technologies. And I think from blockchain, I probably spent from about 2014 until about 2019 or 2020 working on it in one capacity or another. So I'm fairly comfortable. This is called an introduction to blockchain, but I think it's a little bit more than that, right? And I want to really try and cover 3 things. So what is a blockchain in its broadest sense, but also picking up on some important points, some example networks based in what we've tried, what we've seen, what the market sees, and then some kind of next steps. All right. So and I did listen to your conversation around organizations and businesses, and I'll use the term actually interchangeably when I say organization and business. Not all organizations are businesses, but we think about this idea of a business network. You may have heard of that term. And there's a schematic here on the right hand side that shows this idea of a network of organizations that are in some sense connected together. So this idea of a business network or an organizational network is really, really important. And actually, when we think about things like EDI, electronic data interchange, or B2B, business to business or business to consumer, the network that's formed between organizations is really, really important, right? So when we think about a network, we think about these different kinds of organizations. Some are large, some are small, and a network, of course, has a multiplicity of participants. And in this, network we can see over here, we might have customers, suppliers, banks, partners, and those networks can be cross-geography, and they can actually be cross-regulatory boundary. And of course, when we're looking at any kind of economic system, it's almost impossible to reason about, right? It doesn't get set up; it kind of emerges, all right. But this idea of a business network is a really, really important conceptual idea that's really at the heart of what can make a blockchain helpful. Normally, when we talk about the flow of goods and services between these participants, because of course, a network is no good if it's just got agents or participants in the network, right? The network participants have to do things, and normally what they do is they generate and trade goods and services across that business network. All right. So we think about the different participants in a network. We think about their role in terms of the goods and services that they trade with other participants, right? And we really think, normally we think that's what generates wealth, right? We can sometimes think of wealth as a financial number, but actually in a much more real sense, right? Those numbers are meant to represent valuable things to different counterparties. Normally if I'm an organization and I trade with you, normally there's an exchange of some kind, very often some kind of cash or monetary exchange for a good or a service, and that's normally beneficial to us both. You can do things with the money, I can do things with the service. There's some kind of mutuality there, and we tend to think of that as generating wealth. All right. So this idea of business network made up of multiple participants, this idea of goods and services that flow across this network, really important. And then we often think about a market as being a very closely related idea, right? So we can often think about public markets, of which we're very comfortable, things like a fruit market or a car auction, really where anybody can participate. But we also think about private markets, right? So, supply chain financing, bond market, not everybody can participate there. Anthony O'Dowd as an individual cannot just rock and roll up and start participating in the UK gilts market, or go along to the Federal Reserve and start buying T-bonds and stuff. I just can't do that, right? There's a private market, not in the sense that the participants don't know each other, but in the sense that joining them is something that is really by invitation. All right. So just want to get these terms out there because they're really kind of important. This idea of a business network, this idea of participants in the network that could be cross-geography, cross-regulatory boundaries, this idea of goods and services flowing between these participants, and this idea of markets that can be public, where anybody can take part. You could go along, for example, to a fruit stall and buy a piece of fruit and nobody cares. But if you do want to participate in these more private markets, right, or regulated markets, often your identity is important and it grants you admission. All right. What we like to think about this idea of assets. And when we think about an asset, obviously, simple classifications here. We think about tangible assets, things in the physical world that we can see and touch, buildings, cars, real estate, chemicals, foodstuffs, the things we can see, smell, touch, feel in the world. But also there's another class of assets. And of course, we live in an increasingly digital world. But we've always had these intangible assets, right? Things like mortgages, things like securities, we have those. And then a few years ago, we saw, slightly esoteric intangible assets like NFTs emerging, right? So this idea of an asset is truly important. And again, huge classes of intangible assets. We always think of cash also as an asset, right? Cash is very interesting in the fact that it has anonymity, and that's a topic we're going to touch upon a little bit later. So we've built upon this idea of business network, right? We have a business network, we have participants in it, we have the flow of goods and services, we have this idea of an asset. And then we introduce the next important concept. In fact, the final set of important concepts is this idea of a ledger. And of course, a ledger dating back literally hundreds of years. And now our language is going to start to get quite a little bit more technical, right? So we introduce this concept of a ledger, and a ledger being a log of all transactions between counterparties. All right. So literally, when I look at a ledger, I will see the two counterparties, and I will see who's been involved in the transaction. So it involves, really, when I look at a business ledger, and I can look at a ledger for, say, IBM, PwC, or the University of Bolton, right? And I will see all of the transactions that the university has made. And those transactions actually will be an asset transfer, right? That's what a transaction is. It says this counterparty had this asset, this counterparty now has this asset, and we can have simple transactions. So, for example, Matt gives a car to Dave, very trivial thing. But often what we've got is a transaction that's wrapped up in something that's more complex, right? A so-called contract. So a ledger contains a set of transactions. A transaction describes an asset transfer between participants, and we have a contract, which is the conditions under which an asset transfer or transaction can occur. So, for example, a simple contract like, if Dave gives money to Matt, then the car passes from Matt to Dave. All right, so we have some conditions here, but we can also have complex conditions. If the car won't start, for example, or the car isn't, fault found with it, then the funds don't pass to Matt, and that might be described or decided by a third-party arbiter. All right, so more complex. So by the time we've got here, we've really got all the fundamental components that we need to understand why a blockchain is important. We've got this idea of a business network, which is comprised of multiple participants who are sharing goods and services, right, between each other in public and sometimes private ways. We have this idea of an asset. And then we have this idea of a ledger that contains all the transactions being asset transfers between counterparties. And then those are transferred underneath the conditions of contracts, and the contracts put conditions under which the transfer occurs. All right. So once we've got this language, and this is really the world as it is, right? There's nothing here that you guys will say, well, I don't really understand. We all have this intrinsic understanding of a network. We all know what participants are. We've all engaged in markets, public and private, of one kind or another. We all have a strong feeling of what physical and digital assets are. We may have never done double entry bookkeeping, but surely ledgers are not that hard to understand. We certainly understand the idea of a transaction, and we certainly understand the idea of a contract. Right? Once we've got those, we really understand what a blockchain is all about. Right? Because a blockchain is essentially a shared, replicated, permissioned ledger, and all those words are important, and I'll describe them why, all right, that uses smart contracts. Right? Smart contracts are how we achieve that, right? And in IBM, we have a point of view, which is what we're really interested in, is how you can take this technology and use it within businesses, organizations that are cross-regulatory and cross-geographical boundaries to do something. Now notice all these words are important, right? It's shared, right? And I'll explain that in a bit more detail. It's shared through replication, right? That's important. It's not shared through being in one place and everybody accesses it, right? It's shared by being in n places. It's a replicated ledger, all right? It is permissioned. Now, permissioning is a really important word here. And what that means is your identity is going to be important, right? So IBM's point of view has always been, right, and maintains this way, which is we're not interested in anonymized participation inside networks, because none of our clients participate in an anonymous way. When I do business with somebody, I know who they are. Right, that's a fundamental in business, that you know who your counterparty is. Celestine was having a discussion, and I can't remember who it was with, talked about kind of, do you know who you're dealing with, right? And that's kind of vital. We're not going to change the necessity for people to know other people, and this idea of trust is very important. Now, trust is an abstract concept, right? You can establish trust in many different ways, right? So, for example, I can just trust you because you're a member of my family, or you're a friend, or I like the look of you, right? Trust just emerges, right? Right. What we're talking about in blockchain is, can we use blockchain to develop trust? Well, we can through what are cryptographic proofs, and we're going to get to that later. But we can establish trusts in many different ways. In IBM's point of view, it's not just that cryptographic trust, it's also that we know who the participants are, right? Knowing who the participants are is really, really important when it comes to trust, because participants can do things over time where I can have a relationship with a participant that means I trust them. What blockchain is going to give us is something related to trust, but actually quite different to it. It's going to give us proof. Now, proof and trust, they sound like they're the same word. They really aren't. Right? We can establish trust in many, many different ways. One way in which blockchain helps us establish trust is through a shared replicated ledger, right? Which is cryptographically provable, right? And that helps us establish trust, but it's not the only way to establish trust. Our point of view has always been that identity is a key part of establishing trust as well, which is why for us, blockchain is about this idea of a shared replicated ledger, which I think everybody has in common, but also that it is permissioned, that the participants have an identity and that identity is associated with their transaction, because in reality, that's how business works. Now, I realize that might be slightly contentious. We can discuss a bit about it later, but I'm going to get to that point in a short while. So let's have a look at what problem that we're now going to try and solve, right? We understand business networks, participants, and so on, all the way to smart contracts. Let's have a little look at the landscape here. Now, this appears like quite a simple diagram. It's a business network with something like 6 participants, all right? So we've got participant A and participant B. They're the 2 counterparties that are probably doing something with each other. But obviously we have other counterparties involved. We could have a bank, we could have an insurer, we could have a regulator, we could have an auditor, right? So here's a network. Now, normally when we have a network like this, participant A, let's say they ship some goods and services to participant B. So in the top left of that corner and the middle center of that at the upper, those 2 participants are trading goods and services with each other, right? Company A will have its own ledger that describes when it sends stuff to company B. Company B will have a ledger that describes when it gets stuff from all companies, including company A. The insurer will have a record in its ledger about participant A, maybe about participant B, maybe not. All right. The regulator, right, if we're in industry, there'll always be a regulator, will have its own reports that have been generated by maybe company A or company B, or maybe generated by an auditor and sent to the regulator. The auditor, again, will have its own records, maybe of participant A, maybe of B. The bank will be there. It will know about counterparty A. It may or not know about counterparty B because counterparty B may bank with somebody else. All right. So what we get in a normal business network is that everybody has their own view of the world, right? Participant A, B, the bank, the auditor, the regulator, the insurer, everybody has a different worldview. Everybody has their own set of ledgers in reality. Now, what we're talking about is solving this problem whereby everybody having their own ledger leads to a network that is, relatively speaking, inefficient, expensive, and potentially vulnerable, all right? Because there is no one source of truth, right? Now, what we really want to do with a blockchain is we want to solve this problem by introducing a blockchain between these counterparties that is shared, right? So they all have, they all use the same one. It is shared not through centralization, but through replication, and a blockchain that is permissioned. So we understand all of the participants, we know who they are through their identity, and no surprise, that's going to come down to some kind of PKI X509 digital certificates that we're all fairly used to using now in the world, and that's going to give us, this much more efficient network where everybody has a shared view of a set of transactions that have gone between the different counterparties in this network. Now, for that to happen, we need a few things, right? We need to have this idea of consensus, right? We need to be able to take a transaction between any of these 2 counterparties and make sure that it is agreed across the network, right? Now, I'll speak about Bitcoin in a short while and how it does what it does. But let's just try and step away from the actual mechanics of that at the moment. Let's just agree that whenever I do a transaction between these two counterparties, so let's say, for example, participant A sends a good or a service to participant B and maybe exchanges some money in return, that's a transaction. We need that transaction to be approved and agreed such that this ledger that's shared and replicated across these counterparties is brought to a consistent point, all right? We need to absolutely know the provenance of every transaction. So we need to know who are the counterparties who took part. We need the ledger to be immutable, all right? It absolutely cannot change. Now, if a transaction goes wrong, then we can do a compensating transaction forward, but what's done is done, and it can be updated, right, in terms of writing a new transaction that corrects history, but it cannot be deleted. All right, and then the last quality that we really require is this idea of finality. Where in many transactions, when I say something is done, it's done, right? That we all agree that we have what's called finality, and in lots and lots of financial markets, finality is a really, really important concept. All right, so we need to have a way of everybody agreeing. We need to know where things have come from, right? Who they came from as well, right? This idea of immutability, we cannot change the past. And it means if something was written in error to the ledger, then you must write a new entry to correct it. And to know what the current state is, we have to sum all the transactions. And then we need to have finality. When something is written to the ledger, it represents work that has been done, right? It's final. So, for example, if I exchange a car with Celestine and Celestine gives me some cash and that transaction is written to the ledger, that's a finalized transaction. It's done, it's dusted, it's over. All right. Okay, good. So now let's have a look at some of the different kinds of blockchain that we have. Still, I think this is still fair, the most successful blockchain application has been and still is Bitcoin. All right. For us, Bitcoin is an unpermissioned public blockchain. And whilst it would be crazy to say that it's not been successful, for all of our clients, Bitcoin just doesn't hit the sweet spot in terms of identity, because it is a fundamental position of our clients that the identity of the counterparty needs to be known. All right, but I think it is still fair for me to say that Bitcoin is still the most successful blockchain network, but it is an unpermissioned public blockchain, and that, frankly, is something that our clients aren't really very interested in. However, it is still the first and the most successful blockchain application. It defines a shadow currency, so the asset it's concerned about is a currency. All right, and its ledger. And it is extremely resource intensive. Now, obviously, when we speak about generative AI, that's resource intensive on another level, but this is extremely resource intensive. So when IBM expresses this point of view, when we think about blockchains for business, we actually try and contrast with Bitcoin, not because it's better or worse, but our clients tell us some things are important. So, for example, they're not particularly interested in cryptocurrencies. I know a lot of people are, but our clients have assets. They have physical assets. They might manufacture cars, food, buildings, materials, all kinds of stuff they might manufacture, and they trade those with other clients. All right. They prioritize identity over anonymity. Right? They don't value anonymity. You can't just go along and trade a bond anonymously. You cannot just buy a car anonymously, right? So they value that. And the final point here is they actually prefer what's called selective endorsement over proof of work. Now, I know we've had lots and lots of different kind of consensus protocols over the years. But for our clients, when we look at transactions between them, actually, when you think about most transactions, they're actually signed by a relatively small number of counterparties. So, for example, if you go and buy something, with your credit card or with your phone, right? Normally what happens is You will endorse the transaction. You will say, I'm happy this transaction goes ahead. Your merchant that you buy something from will endorse the transaction. And normally, both your bank and the merchant's bank will approve the transaction. So in a normal commercial transaction, four-way transaction, that's actually got 4 people who have agreed to it. You, the merchant, and the 2 banks, your bank and the merchant's bank. And actually, often there's another bank there as well called the acquiring bank. There's normally 5, in a credit card transaction, there's normally 5 counterparties who are happy. And this is this idea of endorsement, right? So the transaction goes ahead between people in the business network because the consumer of the service, the provider of the service are happy. And if there's a financial exchange, that both counterparties' banks are happy as well. And then normally what happens is I will give Celestine the goods that he wants, and Celestine will give me the cash or the money that I want in return. All right. And that requires me to be happy. It requires Celestine to be happy. It requires both of our financial institutions to be happy. And as long as those 4 counterparties are happy, we're all good. So the idea of a proof of work and cryptographic proof is kind of, that doesn't relate to how transactions work in the real world. It really doesn't. This idea of digital signing, however, is very, very powerful, right? Because what we can do with digital certificate is we can sign stuff very, very cheaply from a computational point of view. We can be absolutely sure that when I sign something with my private key, you can use my public key to verify it was me, all right? So what we're going to get to is a model whereby in a blockchain that's going to be used in an organizational or a business context, that we have assets that are in the transactions, that we have identified counterparties, and that we achieve consensus not through cryptographic proof of work, right? But we achieve it through cryptographic signing. And that has the benefits that it mirrors what happens in the real world, but also that from a computational perspective, it's way less expensive to do. All right. So very important point here. So these 3 fundamentals here for us. In blockchain, it's all about assets, right? The participants decide which assets they want to share or to trade. It's all about identity. And it's all about this idea of digital signing and endorsement. And these are all very well established computational techniques, all right? So our point of view and the point of view of a particular open source community that I'm going to talk about in a moment has always been that when we want to see a blockchain, we fundamentally think they can be useful, but we think that this is what businesses will need, all right? And maybe we'll break into a conversation on that later on, all right? As I said before, assets are really anything that are of value, all right? And we're gonna create those on the blockchain, right? Digitally represented in a pre-agreed format. What does that mean? That could mean that you have a particular XML schema or JSON schema or Avro schema or whatever kind of digital representation you have. Our transactions are really going to represent the change of state to an asset, right? And those transactions are going to be recorded on the blockchain. So what the blockchain records is actually transactions around an asset. So when was the asset created? How did it move through its life cycle? All right. So any asset, anything, in fact, if we think about it, anything in the world gets created. It has a set of state changes, and then maybe at some point it gets destroyed, right? Maybe, right? So we think about any asset in the world, whether tangible, whether physical, or whether digital, that asset will get created by a counterparty, one or more. It will then go through a series of life cycle changes. So from the moment it's created to all other changes throughout its life. So for example, it might change ownership, it might get divided, it might get aggregated, right? Every single transaction captures a change of that asset. And the ledger, the blockchain, is going to record those transactions. So I can go to a ledger, and for any asset, and this is not just a cryptographic currency, for any asset, could be a car, could be food, could be whatever, could be a chemical, we will be able to see all of the changes of that asset throughout its whole life cycle. Now, those transactions are generated by something called a smart contract, and most people have heard of smart contracts, right? So as application developers, what our job to do is to create these really three things: a digital representation of an asset, right? And that just comes down to essentially a schema that represents it. The transactions that describe its life cycle, so understanding the asset's life cycle, when is it created, what changes does it undergo, and maybe how is it destroyed at the end of the day, all right? So for example, a mortgage, right, might be created by a bank for me if I want to buy a house or a flat or something, or an apartment. I will then own the mortgage. I will then pay a little bit. The mortgage will change every month as I pay money off against it. And at the end of the term, when I've paid everything back, the mortgage will be destroyed. All right. The asset will disappear. All right. So if I thought about the transactions, my asset is a mortgage, right? The mortgage gets created by the bank. I'm one of the counterparties involved in it. That mortgage will change every month as I pay something off. And at the end of the term, the mortgage will be deleted. A bond is a very similar thing. A bond is issued by a government, or actually a public bond is issued by a government. We can issue private bonds as organisations as well. Then somebody buys the bond, and then every month or every period, maybe 3 months, every quarter, every 6 months, or every year, you will get paid a dividend according to the interest rate. But I can sell a bond. So I could take my bond, I could sell it to Ike, right? Or I could sell it to Emmanuel. And then they've got it, and then they will get the dividend. And then when the bond lifetime matures, then I'll get the money back for the bond, and basically the bond is then deleted. All right. So a bond, a mortgage, these are all ideas of assets. They go through a set of life cycle changes, and it's the smart contract that we developed that describes both the bond and the changes that undergo it. All right. So the ledger contains all of the transactions around the assets that's held in the ledger. All right. Identity, again, absolutely fundamental to know who you're dealing with. And that's because when we deal with our clients, they have obligations to know who their partners are. So for example, you'll have heard of know your customer, know your client, anti-money laundering legislation. All right. So we absolutely need to have that. So in our case, it's kind of, we need to know that business networks are kept private, transactions are confidential, and so on and so on. So what we also need to be able to do is when we create this ledger, we can have situations whereby we can write transactions to the ledger. We want the counterparties who are allowed to know what they are, but we want other counterparties to be held away, but we always want that transaction to be provable. And again, identity is at the core of these. So we really want to use some established techniques. As with Bitcoin, we're going to use cryptography, but we're going to use digital signing rather than proof of work. And we're going to use the counterparty's identity to sign and encrypt transactions. All right. And again, very well established techniques. And then the final point, again, just to drill in a little bit more, is around transaction endorsement. And that really says which transactions are good. So for example, if Celestine and myself are, the example I gave before, I'm selling Celestine a car, he's given me some money. That means that Celestine has to be happy, I have to be happy, and both of our banks have to be happy. If I see that transaction in the ledger, if it's been signed by all four counterparties, they're all happy, that is a good transaction. I don't need anything more than that. And that can be done at relatively low computational cost. So whereas in a public blockchain like Bitcoin or Ethereum, endorsement is really expensive. And many of you will know this, but when I say really expensive, I mean, it can, the Bitcoin network can start to use the amount of energy generated by a small country. Right, that's just not something that's feasible at the kind of transaction rates that our clients do. So for perspective, I've dealt with clients and designed systems for clients that would do 10,000 transactions a second, 24/7 by 365 days of the year. All right, just for perspective, and that will be a large financial institution, of which there are multiple in the world that will do transactions at that rate. That is just not. Never mind the latency, it's just not computationally effective, right? Whereas the digital signing approach absolutely is, all right? Because that's what we use today. The internet and TLS, SSL is absolutely based on that. So we know that can work. So again, whereas endorsement is very expensive with proof of work, actually, if you take digital signing, right? And this idea that in the real world, transactions are endorsed by a smaller number of participants. So, for example, the sender bank, the receiver bank, the payment provider, we can actually achieve all the things we need a blockchain to achieve at a computationally reasonable cost. All right, so that's really our point of view. I'm going to explain some of the technology behind that later, and the primary technology that IBM advises its clients to use. And it's not just us. You'll see there's a very large open source community there. But before I do that, I just want to talk about some example networks. So actually in IBM, we actually took a lot of time to look at networks in many different sectors and many different geographies. All right, so work with lots and lots of clients. Some names here, a lot of names you'll recognize. So we work really across financial institutions, trade finance. So how do you finance exchanges that go across country boundaries? Really important. Government, identity, clearing and settlement. Provenance of goods, not just jewelry, not just art, but also food, in the securities market, in healthcare, in insurance, and in energy. All right. So across a whole number of clients, across a whole number of different commercial sectors. And again, all of these are organizations that you'll recognize, and they're very, very, they're at the center of very, very large networks. All right. A few that I'd like to mention here. So around a transparent supply chain. So the problem here was that when you think about food that's grown on a farm, and that could be cereal, it could be animal. The information that the farmer has about an animal could be interesting to all of the downstream consumers of that animal, all the way to the eventual consumer, right? And that occurs because if we go back, and again, I'll just quickly flip back here to this chart. If we think about here as one of these participants as the farmer and one of them as the person who finally eats the food, when food gets grown, right, or shepherded, and then gets distributed through the supply chain to the eventual consumer, everybody has their own individual ledger. The farmer has their record of the animal. Maybe the abattoir has their own record of the animal, then to the food distributor, then to the wholesaler, then to the supermarket, and then to maybe the person who buys from it. And let's say it's a restaurant that bought, and then the restaurant makes some food. Everybody has their own transactions that correspond to who they got it from and who they passed it on to. But we never have a full view of everything. So if something goes wrong, let's say somebody, heaven forfend, got food poisoning, to actually find where that food originated, it's really difficult, because if we want to do a product recall, it could take weeks and has to be performed manually. We have to go around to everybody. But if we want to manage our inventory, it's a real challenge because we don't have an integrated set of information. So one of the things we looked at very helpfully, and we do actually have this network still running, is what's called the Food Trust Network. And the idea here is that all of the different suppliers in a network can actually, as they deal with produce, right? It could be animal, it could be plant. They will actually record that onto a blockchain such that everybody in the supply chain can get this near instant traceback of products. So we understand where everything's come from, all the way from the origin. And that's used really to build consumer trust. It's helpful in recalls. It really does help in terms of distribution, because you know where everything has gone. Inventory optimization, because you know exactly where things are. You know when things are coming from farmers before you need to. So if you're selling out of stuff and you can see there's a trouble in the supply chain, then maybe you start to source from somebody else. And it gives us new opportunities for analytics and insight across the whole supply chain. And I'll show you a little demonstration of this later. So transparent supply chain, in this case around food, but really lots of products have a supply chain, all right? Another one around global trade here. So again, as I explained earlier with my simple credit card transaction, if I do a transaction with say, Celestine, a car for money, right? Normally it's quite straightforward because we're in the same country. We might bank with the same individuals. Let's say, for example, Celestine's in a very remote country, though. Today he's in Bolton, I'm in Winchester. Let's say, for example, he's on the west coast of America and I'm in the Nordics. Well, I don't know Celestine from anybody, right? So to do that, what I have to do is go through what's called really the global trade network. And what that means is I have to find somebody who will ship the goods between us, right? But also somebody who will vouch for Celestine, and Celestine has to find somebody who will vouch for me, all right? Now, to do that, it's extremely complicated, right? My bank needs to be able to find Celestine's bank, and to do that, it might need a bank. Let's say I'm in Sweden. It might need to have a bank that banks in North America that it knows, that also knows Celestine's bank, right? And if Celestine's going to ship his goods to me, right, he has to know that the money's, he's going to get his money. But of course, if I'm going to send money to Celestine, I have to know I'm going to get a car. So trade financing allows me to finance that, and it also allows me to insure it so that I know if I give my money to the bank, if the car doesn't turn up, I'll get my money back. And Celestine knows that if he sends his car to me and he doesn't get his money, then the bank will say, here's your money. So when we look at global trade, right, it's not just the two counterparties in the two banks. There's who ships it, who insures it, who finances it, right? And actually what's called the receivables, right? So when Celestine actually gives money or is owed money by me, he can actually trade that as well. That's called a receivable. You can actually trade that. So lots of financial organizations are interested in that because Celestine can say, look, I've got some money coming from Anthony in a month, but I need the money today. And so what an organization will say is, well, you've got 10,000 euros or 50,000 euros coming from Anthony Celestine. It's coming in a month. I'll give you 49,500 euros for that today. All right. So Celestine will say, that's okay. I'd rather have almost all the money today. I'll give you 500 euros. And now that financial institution picks up the extra 500 euros, but it gets the whole 50,000 from me. Now there's a bit of risk associated with that. But when we look at global trade, the number of counterparties involved is immense, right? The amount of paperwork involved is immense. And what a blockchain can do is it can really smooth that transaction when it's across these regulatory boundaries, the geographical boundaries, all right? So we have so many participants. We have customs and export, we have inland revenues, we have excise, we have the financial institutions, we have the derivative financial products, we have the shippers, all right? So you know, a lot of stuff you can do in global trade. We did some projects with Maersk, who are probably one of the world's largest shippers, all right, in this space. Another really good example network. And again, we did, you know, that's just a couple of example networks, financial, public sector, lots in retail, lots of insurance, lots in manufacturing as well. All right. A couple of the key players for blockchain adoption. And again, this is kind of counter to what you might think in terms of public blockchains. So regulators are really important because regulators regulate industries. Industry groups can be really important, and also market makers. So very often when we think about a market getting created for an asset that gets traded, these organizations can be important, right? A regulator might be interested in setting up a network because then it's going to be a well-controlled network, right? So that could be, for example, if you look at the bond market in the UK, then the UK Treasury is intimately involved in setting that up as the regulator, all right? When I buy stocks and shares, because I want to be able to sell a stock or buy a stock immediately, there may not be another counterparty on the other side, right? So in that situation, we have what's called the market maker, and the market maker will say to me, Anthony, if you want to sell your, let's say you want to sell your Microsoft stock right now, I don't know what the price is. If you looked it up on Google, you see Microsoft stock might be, I don't know, $300 or something. And I say, right, I want to sell it now. Now, if you want to sell something in a market, actually, in reality, there needs to be somebody else who's prepared to do the buying. What a market maker will do is a market maker will say, Anthony, I'll give you 300 for the Microsoft stock now. They'll take it straight off your hands, and then they'll wait for a buyer and then sell it to a buyer. So they'll hold the stock for a period of time so that you get the price. So what that is that's somebody called a market maker. They make the price in the market for a stock based on the averages that they see, so that if you want to buy some shares immediately or sell some shares immediately, the market maker will do it for you, even though there may not be another counterparty that exists right now. And what they'll be doing is averaging all the buyers and sellers over time to do that, right? So that's what a market maker does. And then sometimes you can have an industry group, and an industry group wants to encourage best practices, right? So we see that all the time, right? So I wanted to put these down here because these are not traditionally organizations that you might think of as being important, because often we talk about decentralization in blockchains, and we talk about removing things like the regulators or industry groups or market makers. But in reality, these organizations are super important, all right? And then some next steps. So IBM's point of view has always been, we want to do something in open source. You know, we see nowadays that if it's not open source, it's not going to win, right? Just from a technology point of view. Also from a technology point of view, we never want to make an investment and it be wrong, right? And open source is a way of really creating something in a public arena with lots and lots of other participants who play with you to do stuff. So, you know, you might create stuff. So those of you who might know, you know, Apache, Tomcat, very popular server, but lots of other, you know, databases like Spark, Postgres and stuff. These are all open source technologies. It's a really well-established way of developing technology. So what IBM did in 2015 was say, we would like to develop an open source blockchain that has these properties of being a shared, replicated, permissioned ledger. And as you'll see, we got together with a very large number of other organizations to develop that. And it's under what's called the Linux Foundation. Most of you, I hope, will have heard of Linux. It's probably the world's most popular operating system, certainly the most deployed operating system. And the Linux Foundation has lots of projects, and we said we would like to work with a number of other organizations to set up a permissioned, shared, replicated blockchain, and that's called Hyperledger Fabric. And to this day, that is the blockchain that we tend to, you know, when we do blockchain projects, encourage our clients, and it's our point of view we do that. It's not that we won't do stuff on Bitcoin, sometimes we would, but actually our point of view is around blockchain for business is that, you know, permissioning is important, identity is important, and it's not really about cryptocurrency, it's really about assets. So all containerized, all runs on any Kubernetes, can run on any cloud. Here were the number of organizations. I think we founded it formally in 2016. I think at its peak, there was something like 250 participants, but you can see that IBM set up with Intel, JP Morgan, Hitachi, American Express, you know, SAP. I mean, you can see the names here, various universities, various technology companies. And, you know, we thought that there were three things that are important, that it was open source, right? So it's a fully open source. You can examine all the source for it, that it conformed to open standards, all right? And then it had an open governance model, which is if you want to contribute towards Hyperledger Fabric, right, then you can go in, you can join the community, you can contribute code, and you can have it incorporated into that blockchain. And we really felt that was very important. So we then took that blockchain, and that's the one we use for engagements with our clients, as do lots of other people as well. And of course, there are lots of other blockchains that are available, right? And they're all good. But from our point of view, it was all about a permissioned, shared, replicated blockchain that was going to be used by businesses who knew who their counterparties were. Okay. We've done multiple releases of it. I think version 2.2 was released in 4 years ago. We remain one of the largest contributing people to that organization, and it's a big deal. All right. There was a little demo here of something in the Food Trust Network. If you are in France, you may be aware of this kind of potato product. And if you look on this potato product, there's a little, if your French is any good here, you can see that transparency is something that they cultivate. There's a little pun there. And you can actually scan that QR code on your mobile phone. So whenever you pick up some of this potato product, you can scan it on your phone. It'll give you a consignment number. And then if you press let me discover, that's correct. And then what will happen is that you'll actually see that product was, produced at that point in time. And you can go back and you can see the farm that it came from, and who was the partner who created it, where was it manufactured, what was the quality control, and when was it stocked and when was it bought. All right. So using this, you can actually go to a physical product and you can see the full provenance of it, from where the potatoes came from, what country, and then how were they distributed, and when did they arrive at the supermarket, and so on and so on. This is the product that is available. All right. So I just wanted to share that. So I'm going to stop there because it's quite a lot of information. All right. Let me just stop. I will make these charts fully available, but maybe as we've got a few minutes left, it might invite some questions or some comments or some thoughts and observation. And again, I'm very happy to take any of those, either now, online or offline. But I hope that's given you some perspective on this idea of a blockchain for business. Emmanuel, some questions.
Yes, thank you very much for the very interesting presentation that you've given us on the Hyperledger and blockchain. I was wondering, what is the most successful project, or the most 2 or 3 successful projects you've worked on in relation to trade? What are the most compelling cases of the use of blockchain in trade, and any failure that you've experienced, and key lessons learned from these failures? Thanks.
Yeah. So I think, so my background before I joined IBM, I was at Manchester University. And I think always when we're having discussions with an academic institution, we should remember things. I always say the difference between somebody in a university and somebody in a business, and again, this is slightly humorous, so indulge me for a moment, is when I work in a university, I always want to hear, I don't know. When somebody doesn't know, I don't know. It's absolutely fine. That's an acceptable answer, all right? Whereas often when you're in business, everybody has an answer all the time. There's no question that can't get answered, right? So there's a slightly different mindset there. So I will say, in the spirit of being, transparent, blockchain didn't turn out to be all we hoped it would be, right? We invested a significant amount of money in the technology, right? In the open source movement, with lots and lots of clients, hundreds, if not thousands, in lots and lots of sectors, with lots and lots of use cases. All right. And, our investment in blockchain is a relatively small fraction of what it would have been at its peak in, say, 2017, 2018, 2019. They were the peak years. All right. We tried lots and lots of supply chain stuff, trade financing. We work with, I can't give you their names here, but some of the world's largest financial institutions who are involved in. It's very easy to work out who the organizations are. So there are organizations who will have presence in multiple countries, right, across multiple geographies and multiple continents, and who've been around for, in some cases, hundreds of years, right? Because they are that. So they have a huge incentive to improve those processes. And in reality, the gains didn't emerge. And I would say, it's really, really hard to set up a network. It's a really hard thing to do. And I also think that the gains over the way things work today are relatively marginal. All right. So if you look at things like remittances, which was another huge use case, remittances happen all over the world. We all know that. Right? You work in one country, you want to send some money back home. That's a huge market. And there's actually, the amount of money people pay for remittances is quite large, but setting up remittance networks is quite difficult to do, right? There's a lot of technology you need to deploy in a lot of places. So that's the thing. When you look at a shared replicated permission ledger, everybody really all the people who endorse the transactions need to have their own copy of the ledger. They do. But that means you need to deploy technology in every single counterparty, and the transaction needs to be endorsed by every single counterparty. Now that's important, right? But the difficulty with that is that when I look at a classic B2B network or an EDI network, myself and yourself, Emmanuel, we do one part of the transaction and we'll agree with each other. And that's easy. You have a piece of technology, I have a piece of technology. And if I use things like EDI, the only thing we need to have in common is what's the communications protocol effectively in the data formats between us. Now, when you deal with Celestine and you take what I've given you and sell it on to Celestine, you can use a different method with him and a different protocol. That's completely up to you. So it has a very low technology footprint, right? And things have been quite well digitized today, and they're quite efficient. right? Now, if the three of us had to take part in a blockchain, you'd need to have a copy of the ledger, smart contracts, so would Celestine, so would I. There's quite a lot of technology to put in place, all right? And it's quite complex compared to what's there today. So it is better, but I think it's not better enough, all right, over what exists, right? And you do have to get people to write smart contracts rather than so they've got to replace what they've already got, right? Which is always a big challenge in technology, right? We can't build on what we've got. We have to change what we've got. So in our experiences, it's that setting up a network and really the gains over the existing processes they just weren't big enough to sustain, if I'm being really, really honest. All right. And I think that's why still today, blockchains really are still used largely for cryptocurrencies. All right. And that's a new asset class. And again, I don't have any politics behind. I'm not a big Bitcoin holder, by the way. I don't have a dog in the race, as we say. But still, if I look at blockchains today, they've really still largely only been used for cryptocurrencies. And I think, yeah, if I was to summarize, Emmanuel, it's setting up networks is really hard, right? And actually the gains for the assets that people actually trade today, both physical and digital, the gains are marginal, right? Because actually lots of our networks are actually pretty efficient. Right? Hope you don't mind that fairly transparent, honest answer, all right?
No, thank you very much.
Okay. So
can
I
ask, since I see that Ike is going to come in after, since two of you are teaching us.
Yes.
My small question is, you mentioned a very high energy consumption. I'm not quite sure whether you're referring to energy as energy or you are...
I'm referring to electrical power consumption.
Or electrical, so you mean energy as energy. So could you speak a little bit to that aspect? What exactly, what makes this? Yeah.
So today, when we create a ledger that has no identity behind it, what we have to do is we have to solve a cryptographic puzzle to form the transactions in the ledger, the so-called Merkle tree. We actually have to solve a computational problem. And solving that computational problem is compute intensive, right? And the person who solves it get a little prize. Actually, they get a little Bitcoin for doing it. So every block that gets committed to the blockchain ledger, the Bitcoin ledger, has actually been solved by a compute processor. So let's say I have a whole bunch of, let's say, 1,000 transactions. They get put into one page of the Bitcoin ledger. That would get distributed around to the global network. So on this call here, I think I can see two pages. I can see about 16. I can see 18 participants in this call. So what would happen is that the Bitcoin network would say, I've got a new block that contains 10,000 transactions. It would send it out to all 18 of us. All 18 of us will race to solve a cryptographic puzzle. And that will be how that Merkle tree has been cryptographically formed, which will also link it to the previous block in the blockchain. And the first person to do that, to solve that puzzle, puts their hand in the air and says, I've solved it. Everybody else looks at it and says, agreed. They then take my block and they add it to the existing blockchain. And the next block comes along, has to be solved for the blockchain that now contains the block that I put on it. So, number one, that's computationally really expensive. That's called the proof of work. And that takes a lot of compute power to do. But not only that, there was only one winner, but 18 of us were incentivized to solve it. So actually, not only was it incredibly expensive, but it was incredibly expensive 20 times. And what you've got in Bitcoin is an arms race where everybody wants to solve this problem because they get a little prize when they solve it, a Bitcoin. So they get to put their own transaction in there that says, you won a small Bitcoin. Now that's just computationally frightening. I mean, it's so expensive, and you'll have seen things like, if the Bitcoin was to do even a fraction of what, say, MasterCard or Visa did, it would consume more than the energy generated by Iceland. Right? It's just a phenomenal cost. That's just not doable. I can tell you from not just the size of IBM's clients, but the clients worldwide and the kind of transaction rates they have, it just doesn't work. we don't have enough energy, right? So that's why people look for different forms. They look of, proof of stake, for example, whereby, it wouldn't cost as much to endorse transactions. And what we said with our partners in Hyperledger was, that's just not how the world works. In the real world, the transaction has to be agreed by myself and Celestine and all the counterparties who need to agree to it. There's no computational puzzle that gets solved in the real world, all right? So for us, it was just like, it's not just that it's expensive for one person. You've got all of these people chasing after a prize, and that's just not how the world works. So from an energy perspective and from a sustainability perspective, we just couldn't stand by that as an approach. It's just not, it doesn't fit with our credentials. And our clients told us that's not what they want. All right. And Bright, I'm not trying to be confrontational there. It's just, I get it. I get the crypto class asset. It's fine, but that's where it remains, frankly, and that's okay. That's fine.
Yeah. Thanks. No. Thanks very much. Thank you.
Ike, question, observation.
Yeah. Your microphone.
Yes, we can hear you. Oh no, we can't hear you now. Can't hear you. Oh. Almost there. No, can't hear you. No. Yeah, can hear you now. No, not now. No. Gosh.
Okay, don't worry. We'll talk next other week.
No, we can hear you now.
No, we can't still hear. I'm the ones talking.
Oh, okay. I'm sorry, Celestine. I'm sorry. Okay, he wasn't.
Yeah, that's it now.
Oh, that's it.
Yeah.
Got it.
Wow.
Anyway, any other question quickly? Okay.
And I will make
our time is already up. Yeah.
That's a pleasure, Celestine. I'll make all the charts available. And if anybody has any follow-up questions, because I realize sometimes in a group area, people don't want to have a discussion because they think,
yes,
I don't really want to share my point of view in public. That's fine. I'm very happy to work with the university to have a discussion later on.
Yes, Anthony, thank you so much. We are going to, like I told you, we are working in we can develop. As you asked me the other time and you said, oh, there are other ways we can use AI, in supply chain. And I told you today's lecture is just on blockchain because you were like, okay, you can talk on the other areas. That brings me to say, we're going to have that discussion when we have talked with Emanuela and Dr. Bright and the group in terms of looking at develop, WTO package, to make things easier for them because we know the power of AI, what AI can do.
Yes.
And then how to make sure that their work becomes easier, and then you told me I'm so happy that you came. I will send that post and also thank Nikolai, the CEO, for giving us this opportunity. It's really an honor, and I know my WTO staff, they're also very happy because they never know that you were coming. So at a very short time, she was able to give that directive, and you also left your personal issues and personal problem to be here. I really appreciate so much.
Oh no, that's an absolute pleasure. Absolute pleasure.
And please send the slide to me. I will distribute to them again so that they can go through what you have said, and then we'll get back again to you. I promise that we'll get back again, and then where we can have that sit down to look at modalities of what we need to do for WTO. You see that?
Absolutely, yes. And again, if any questions you have, please, with Celestine and myself, I'm more than happy to give you perspective on it. And if it helps jumping on a call and you have something you want to have a discussion, or you think something I said was slightly controversial and you have problems, I'd rather not discuss it in a group forum, absolutely fine to help in any way we can.
Thank you very much. Emanuela, any other thing to say? Okay.
No, just to thank Anthony.
Right.
Oh, right.
Well, thank you very much. I think we all learned a great deal, and we'll see how we take this forward with respect to WTO specific work program. Thanks very much.
Pleasure.
Thank you very much, everyone, again for coming. Next week will be great. I'm bringing one of the professors in supply chain, Professor Kim. He will be there. See you next week.
Thank you.
Thank you, Anthony.
Bye.
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 Bye-bye. Bye-bye.